Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's the 28th of November and our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, coming out to us from Singapore. Vishnu, great to have you on the show.
Always good to be here, Brian. Thanks for having me today.
Now, Vishnu, first of all, we cannot say anything else before we start about talking about unrest in China. Break it down for us, and what do you see the impact for China and the rest of the region?
Yeah, I mean, oddly enough, this is just building on one of the reservations that we had. So when China came out, and swinging on the economic policy stimulus, markets did get very excited. But one of the bugbears left in that system, and these two feed off. So there are two big ones, but they feed off each other. One of it was the COVID policies, even though they had been changed to dynamic and more targeted, there was a lack of clarity on thresholds, triggers, and things like that. And that's exactly what has played out with the targeted lockdowns that seem to be working on different thresholds and triggers across China, depending on the local governments, and that had culminated very, very tragically in deaths in Urumqi in the building fire, and that has been a rallying point and a spark for protests across China. And I think that has bring forward all the or bring to the fore all the pent up frustration, so on and so forth. And this negative sentiment has completely erased any stimulus that markets were expected to derive from a whole host of stimulus, from the property developers getting excess liquidity to work with, right down to the triple R cuts done just on Friday. So markets are now back in the mode where they need to think about two things. One is, they're still on and off COVID with very opaque timelines and triggers. And the other, the far more important issue, which has got to do with really a question of, even if there were policy stimulus to come through in China, and we're starting from a very weak point, the question is, can they get past the confidence deficit sufficiently to get the economy off its downward trajectory? So that confidence deficit is really what I think is causing a lot of consternation, which is why you've seen the ripple effects, pervading many things, including the Aussie dollar down sharply because of the commodity demand impact or dent that markets are beginning to second guess. And so these are really the impacts from it, which an economist would talk about as a multiplier effect. Can this policy stimulus have any effect if confidence is not there? So we will be pushing on the string, so to speak.
Now, Vishnu, I want to play devil's advocate here. We're all looking at, and I'm going to say that we're all looking at this through a very Western lens. Is perhaps the protests overdone, or there's an overreaction to these protests?
Well, I think that's a fair question. I mean, whenever we speak of China, we need to be very cognizant of the fact that the context is quite different, and it's the perceptions may not always be right. But in this case, if anything, the Western lens may not appreciate enough the significance of a protest, because protests may be fairly more common elsewhere in the world, but not in China. So firstly, the bar to get through to have widespread protests, that's already the kind of thing that causes eyebrows to be raised. Furthermore, if we were to follow the news reports that are suggesting that the protests are not just about getting rid of COVID measures, but is targeted and critical of the party and the president, these things are really left field. I mean, this is very unusual in China. So we need to be, as you put it, play devil advocates with ourselves in so far that we need to say that we don't exactly know what the outcomes would be, because it's not a very usual thing that takes place. So there's a greater degree of uncertainty as to what to expect as an outcome. I mean, it's less likely that you'll see the authorities deferring either. And so the question for us is what comes of all these tensions? And of course, an optimist will say, you know what, these are teething problems, and the COVID measures were going to be rolled off anyway. Really, this is just an interim disruption, and that's a valid counter argument. So that's where the uncertainty lies, and it's the uncertainty I think that markets will be grappling with and struggling to deal with. I think this month and next, and that could, for Asia at least, get in the way of hopes for a Santa rally to kick in as we get into December.
Now, speaking of a Santa rally, we've had 475 basis points rate hikes, but then there seems to be increasing chatter of a Fed pivot perhaps to a lower quantum perhaps for the December rate hike. What are your thoughts on this, and will this also contribute to a Santa rally?
The initial evidence suggests that it is enough of a catalyst for markets grasping at straws to fuel a Santa rally on these fumes. But speaking of pivots, peak rates, let me throw in another P. I'm going to be pedantic and suggest that if you pause at an elevated rate, that's to say, if the policy doesn't, in the real sense of pivot, turn into a cutting cycle, then we need to be really cognizant that in more than a decade we haven't seen rates at these levels, cumulative hikes of this extent, and that will cause some hurt. So even if markets get into a Santa rally mode going into early mid-December, the thing that they need to be aware of is that don't be surprised if the Grinch sticks around for early next year, and we don't get a smooth ride up.
Now, on that note, then, let's zoom on to this week. And what are some key data points and events that we should be looking out for that could move markets?
Oh, and I think that's a really important question. So really early week, I think there'll be just so much noise around this protest that markets may take their eyes off the data. One particular data point that's worth watching is the Eurozone CPI, because unexpectedly, ECB speakers have come out sounding more hawkish than expected. So where markets were very sure that after 275 basis point hikes that the ECB would do a 50 step down, they're less sure now. So that can really kick up some volatility in yields in the Eurozone with spillover effect to US and a cascading down impact on Asia. So there can be some volatility around the yields and FX markets mid this week when the Eurozone CPI numbers are out. Closer to the region, we've got India's GDP print that's going to come out, along with Bank of Thailand taking a decision which is widely expected to be a calibrated 25 basis point hike. But the FX markets, though, may be a lot more fixated on the renminbi, the offshore renminbi, the CNH, so to speak, how it trades, and that may have a much larger bearing on EM Asia currencies until and unless you get big moves in the dollar or correspondingly the euro.
Now, Vishnu, thank you very much for your insights. Thanks for coming on the show.
Always my pleasure, Brian. Thanks for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.